Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. And today let's talk about the Japanese stock market. Recently, Japanese shares have refreshed to a 34-year new high. And let's take a look at why. On January 9th, the Nikkei 225 index, the benchmark of the Japanese stock market, broke 37,000 intraday, a new 34-year high and approaching its all-time high at the turns of 1980s and the 90s. As the Japanese stock market attention continued to rise, a lot of institutions have released their expectations about the stock market. And in summary, most of them are still optimistic about the stock market in 2024 or believed to begin in a growth trend continually. It is worth noting that since this year, a number of institutions have been prompted about the risk of investment in the Japanese stock market. The core competitiveness of the Japanese market is weakening against the value short-term allocation as global investors continue to rise, one agency said. Others pointed out that the upside of the Japanese stock market has both economic and financial factors, which may face a reversal in 2024, and investors need to pay attention to the potential risks. Since the first quarter of 2023, Nikkei 225 index has maintained an upward trend, rising 30.13% for the whole year of 2023. The Japanese stock market also has performed well since 2024. As of February 9th, the Nikkei 225 index closed at 36,897.42, the highest level since 1991 and up more than 10% since the beginning of the year. It has once broke the 37,000 points, the highest reached 37,287, the highest in nearly 34 years, only a 4% historical from the all-time high of the late 1980s and the early 1990s. Nomura Oriental International Securities recently pointed out that in the recent monthly investment strategy of the Japanese stock market, that there are four factors behind the opening annual rebound of Japanese stock market in 2024. First of all, it has broke the important threshold of 34,000 points, and the CDA and other market participants increased their futures purchases. So it is the government participation that have pushed up the stock prices. Second, the selling pressure of individual investors has eased, and the supply and demand side presents a shortage of sellers. Third, the Bank of Japan will not rush to withdraw from the negative interest rate policy to support the weaker yen. Fourth, due to high international geopolitical uncertainty, money flows to the Japanese market. Nomura Orient International Securities believes that the above four factors are expected to continue to force. The future strong performance of the Japanese stock market is expected to continue, but still need to pay attention to the risk of underprice in the third quarter of fiscal 2023 performance, which is slightly lower than expected, and may have a negative impact on the stock price in the short term. It is recommended to focus on industries that can withstand the impact of a Japanese yen rise, benefiting from price increases and a recovery in Japanese capital expenditure, such as construction, real estate. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.